What is good, guys? This is a video where I'll be breaking down my strat and the risk settings, the entries, and how I classify my setups. Is it an A plus? Is it A trade? And without delay, let's just get started. Okay, so let's use a MNQ here. So before we go into the charts, I'd like to explain it a little bit. So now, how do I trade? So as you know, price moves in, impulsive, corrective, impulsive, corrective, impulsive. So I can trade any of these moves as long as the lower time frame shows me structure. So let's say, for example, there is a POI here. If there is a fair value gap here, then what would I like to see? Retracement into the gap, then condition to the upside. So this, I use fair value gaps as my POI. So if we go on the lower time frame, so let's zoom this in, kinda. Something that will trigger me to have an entry is if price, creates a low. This one's also possible to be run out, but if you get an intermediate term low or a liquidity level here gets run out, then price starts to reverse. This is where I like to see what I call an inversion fair value gap, and I will target this as my buy side. So price will probably go in this kind of way, something like this. So here, these are the two things that I like to see. So let's say we have a fair value gap here. That's the first thing, like a POI supporting price. I see a good sweep of liquidity. Now, an extra confluence will be if we get an SMT this low. Let's make this another color. Now, if we get an SMT at this low here, then that's really great. Then the next thing I will be waiting for is this move here to get inverted. So the moment we invert at the candle close, probably somewhere around here is where I will take my first, where I will take the trade, obviously. Then target somewhere around here with my stop at this low or close to that low, giving me like a 1.6 to 2R. That's like the ideal risk to reward that I use. So this is what I come into the market looking at every time, and that this happens like literally almost every single day. It can happen in bullish scenarios and bearish scenarios. So this is for a bullish scenario. Now for a bearish scenario, it's pretty much the same thing. Market is moving lower, retraces into a POI, or let's say the POI is here. Now if the POI is here, then this means if that POI is to hold, then I should see some internal price movement showing me that we are about to go lower. So what's the price movement? That is if probably we run a low, a high. It could be a session high, it could be a previous day high, and then market reverses. It could also be a minor buy side pre-market high or data high. So any form of liquidity. It could also be relatively equal high. So after that manipulation is when I would like to start looking for my entries. So this is something that could happen. Now after this fair value gap here, inversions is the one I wait for, an inversion for me to get the entry. So here is the inversion fair value gap. Now the moment this thing gets inversed, right there is my entry, and then I will target the next ideal liquidity level. So you can see, like for example here in this particular scenario, even though it's not the candles, I will get around a 2R. So I think that's the breakdown of how I trade. Let's go into the charts and see it in action. Right, so analyzing from here, after this market crash that happened on Friday, you can see we ran a low here, but when you check the weekly, we are in a weekly fair value gap. So if this weekly fair value gap holds, then we could potentially push higher. So now going back to the daily, I'd like to see a continuation to the upside. Probably if the market is strong enough to offer that, then I will take that. But so far on the daily, there's nothing that clear of a buy that we can form a bias from. So what do we see here? We are in a 4-hour fair value gap and a 1-hour fair value gap, but when we refer to the weekly, we saw that we were bullish. So it could be small momentum movement, but end up and it ends up being bullish. So that's the bias I'm gonna go with, without disregarding the fact that I could be wrong and the market could first head for these lows here, this low here, and this one. Keep in mind that this is a new week open gap. You can see it right there, so it's also a liquidity level. So this is a new, let me undock there. Now we have buy side and sell side. This is sell side and this is buy side. All right, now let's go lower, the 1 hour. What is on the 1 hour? Well, we have a good liquidity run right there. So this is the first confluence, liquidity run. We are in a 4-hour fair value gap, so this will be a low hanging fruit that will get taken out. So I believe price could probably do something like this, run the high, then probably then head to these lows, because this, we also have a gap there. So let's see if internal PA delivers. All right, so now we are on the 15-minute. This high is still intact. These lows here are also good. We've inversed the 15-minute gap here, another sign, and this is 9 opening. So let's just sit on the 1 minute and wait. I have some sell side here as well. Let's see what happens at the open. So market just opened. We ran more sell side here till here, and these lows as well get run. So we can extend this. We can do it like this. So we have run on the lows here. Sorry, sweep. Yeah. Now let's check where ES is. As I said, SMT. If there is an SMT, it's for confluence, and you can see there is an SMT from here to here. So very good SMT on the lows. So let's see that. Do we get a strong inversion? Right there, we get one. It's at 9:39. We have an inversion fair value gap here. Now when you check the 5-minute, it's looking okay. And take it a 5-minute high or a 15-minute high, whichever. So let's see if this entry plays out. So we can take this kind of trade and probably target these highs, or this slow hanging fruit, or these highs here as well. So that's 38, and that means I will be risking around 6 micros or 7. Let's take 7, then we buy. So that's $500. I'm trying to risk. Wait, I have 500k here. Huh? I can actually take 70 instead. I hadn't seen that. I don't know why I chose 50k, but let's disregard that. I'm gonna risk this now. Let's see if it plays out. And boom, target profit gets hit, and it was close to stop loss, but real quick it ended up hitting take profit. Now that's the first example, and it could also hit to this high or even this high, but the low hanging fruit, you know, you can get money from that. You can target that instead of going really far. So let's see if it continues. You can see it continues to this 15-minute high, and later it starts to reverse. So I got my piece of the pie, and that's basically it. And let's go to the next day for the next example. Right, so you can see the next day ends up, okay, starts looking bearish. We're in this gap here. Price is rejecting this gap, and you have this new weak open gap that price hasn't tapped into yet. So this low here, and this low here are potential targets, and this one here. So something I'm anticipating price could do, if these are my targets, then obviously it's retracing to a gap, then head for the lows. Now, so I'll obviously mark this gap or the 4-hour high, going up down to the 1 hour. We've got sell side liquidity and some buy side. So you can find a trade, like price is fractal. What can happen on the 1 hour can happen on the 15, can happen on the 5 and 1 minute. So there is potential that we can find an entry going to the upside. That's possible. if maybe the 15-minute has a gap and something like that, and then a fractal entry forms. But it's possible we can also find an entry taking the shorts. So we gotta wait for the market to deliver more or give us more confirmations for us to take anything yet. So 15-minute have some highs. Just gonna sit and wait and see what happens. Right, market opens, it starts tanking directly to the sell side that I had marked, and it's close to the new day open gap, so I'm just gonna wait for that. Now when you do this, you can see that this new day open gap, it's also a POI. If you remember, it's like a POI as well, like according to ICT's teachings. Now let's check with ES. All right, open this, you can see we have run this low. ES has done the same exact thing, and so that means first thing, we are in a POI. We've run sell side right here, run good sell side, and I believe the 15-minute could start showing some signs of heading higher. Now this is what we call longing when the market is bearish. So you get the inversion right there, and here is where I'd like to place my entry right there, and I could potentially target all of this here. I'd like to target a 15-minute gap, which there's not. Probably can target there, and yeah, that will be it. Now let's check the 15. Everything's looking okay. We have the sweep. There's no SMT yet. We're in a POI, so I believe this thing will deliver. So that's 500/80. Now I don't know why this account is showing 500k. I had chosen 50k, but let's risk the amount that's worth this account. Gonna be buying too many contracts and see if we can reach here. It's a 5-minute gap that I'm targeting. I mean, we'll go probably to those relatively equal highs as well, but let's see if it hits the low hanging fruit, and the low hanging fruit delivers right there. And these highs here are also suspect, so just gotta wait and see. And in just a couple of minutes, the highs, relatively equal highs, get delivered too. So I could also target here, but I target what I'm satisfied with. I mean, getting 4.38 R is okay, but are you sure you can do that consistently? Are you sure price will deliver that consistently? So with the backtesting results that I've gathered so far, I became comfortable with 1.6 to 2 R, somewhere around there in that range. And sometimes I even take 1 to 1.3 R, something like that, because that's what I can do consistently. That's what the market can offer me consistently. That's what I can see most of the times. And this also shows that, okay, sometimes you can leave runners to offer like all of this. So if we closed here, like, you can get all of this, but that will be a runner after securing your profit, because you can't fathom the pain that you would get if price did something like this. Let's say you targeted here, then comes here, edges it, then does something like this. What would you do in that position? You crash out, and that's what we want to avoid. We want to stay in a calm mental state for trading. So let's go to the next day. This is a high win rate strategy. Well, it's around 60%. So 60% is a good strategy, is a good win rate, considering you have like the maximum over 2R. That's really good. It can make you profitable in the long term if you are disciplined and you know how to do good risk management. Now let's go to the next day. Now the next day, you can see we had obviously started soaring high, and this is like basis off of the weekly. Check the weekly, you can see, yeah, it's going high as we were expecting. Now the daily, we're in a gap, but that doesn't mean that it invalidates the weekly analysis. So the low hanging fruits here, I don't know if those are gonna hit, but they could also get hit at open, then no trade, and it's okay to not take a trade as well. Now we have a good retracement into a 1 minute fair value gap here, which is the first confluence POI. So let me note them right here. So first confluence, high time frame POI, that's the first thing. Now the second thing, that is liquidity sweep. And then the third thing is have we inversed a fair value gap, IFG, right? Strong, by the way, like not like price. A strong IFG means price has closed above or below that fair value gap. That fair value gap is big enough, like not some tiny one handle fair value gap. So it should be a strong inversion fair value gap. And the fourth should be SMT, and this is obviously optional. This is it. Now also I think I should add 0, should have high time frame narrative. Like we could have the POIs, but if without narrative you're gonna do. All right, so these are the highs that I'm looking for. I'll go down to the 15-minute, and so you also have some more lows. This one was at 8:30, and remember, most of the times at 8:30 we have some news, so this is like data low. And also have these highs here. Now let's see, I'd like to see these lows get taken out, then we go higher. Doesn't mean that the exact opposite could happen, but that's what would offer an ideal opportunity for me. Now at the open we drop extremely low, and then retrace back into this gap, then we drop again. Now when we go up on the 15, you can see we are now in that 1 hour fair value gap with this liquidity sweep right there. Now I'd like to wait for an inversion, and here we get an inversion. You can see closure above the fair value gap. So here is the inversion fair value gap. Now this here is the fair value gap in the 1 hour. So when you check the 1 hour, it's looking really good with that. Now if we can't take longs here, we could probably target like a 15-minute high, you know, probably break even here, and then finally take profit at this high or this one. So whichever satisfies you the most, something like this. So we can take it 1.5 or 1.8 hour there. So this will be the trade, and let's open up ES to see if we got some SMTs. I don't really like to trade ES because ES is slow and NQ is kind of here. So we have like 3 assets, main assets I consider good in the futures market. There's US30, NQ, and ES. So US30 is the first on the list, like it's very fast. The second is NQ, it's in the middle. ES is really slow, like most of the SMTs form because ES can take out a low, that means it's slow. Oh, that rhymes. So this means that I trade the one in the middle, not too fast, not too slow. Right, so as we can see now here we have good SMT, and now I think it's time for us to long this thing. We have 3300 stop loss. It's a micro, so that means 33 times 2, that's 66, so that's 5k. Is it 5k over what? 5k over 66, so we'll be taking 75 handles, 75 micros. Apparently the account turned out to be bigger than I thought when I was setting it up. Now let's see if it reaches here. We move to break even at the high. Now just sit and wait, and you can see we get stopped out right away, which is part of the process. Like this model is not bulletproof, it's not foolproof, it can face losses. And right there, after getting stopped out, market continues going lower. Let's see if the SMT is still holding. You check the 1 hour. What low is it? Sorry, at the 1 hour, this is the low here, and you can see the SMT is still holding. I mean, the trade could still be valid, but you just gotta sit and wait and see if it delivers. So there is no inversion yet, except if you wait for the 5 minute, for which the 5 minute has no inversion, and the 1 minute no inversion at also. Pretty much no trade here. So if you trade 30 second, you can see the targets get hit, which is absolutely beautiful. So sometimes you'll get stopped out and it's totally normal. It's just that you have to adjust and accept that losses happen and not crash out. So this is pretty much it. No inversion, no nothing. Well, we have the SMT, we have the sweep, so just gotta be on the sidelines and wait. Let's just go to the next day, because setup has been invalidated. What are we waiting for? Except if we can, learn, sit and be learning, see what price does later. So you can see we continue moving higher. Now the only possible way for me to re-enter is if we get like a 15-minute retracement. And what does that mean? That means that the 15-minute will be the one providing the high time frame POI. All right, so this is a 15-minute gap. Let's see if it forms. All right, 15-minute gap forms right there, and as good as it looks here, we don't retrace into it, but yes, did, which means there is some kind of SMT here. See, right, it's right there. It's probably gonna go higher, but I might probably not will get involved in any of this. All right, we're done for this day. Now let's go to the next one. And well, okay, so you can see the next day also is bullish. Target daily target will be this high here. Like the removal of these drawings. Now go down to 1 hour. So 1 hour, we don't have any fair value gap. I like to see fair value gaps. Not, I don't really use other blocks. Right now, there is a 15-minute fair value gap here. 15-minute fair value gap here. Lowest hanging fruit there. Now these are the targets I'd like to see for the day. Now going on the lower time frame, if you can take out like a pre-market low, that will be good. I'm just gonna wait for the open because the volatility at the open is really huge, so you can just take a trade. Right now we run these relatively equal highs right at the open. I'm still waiting for a strong sweep, probably below these lows, which we don't get. Like price runs this low here and then starts to soar high, and then price runs that high there, then starts to head low. Now opening up, yes, you can see that the 15-minute is not the cleanest. We have an SMT at the highs. Prices run both of these, so there is this, which shows me that price could be heading to the next potential POI. So what would the POI be? Probably like something on the 2 hour or the 1 hour or something like that. So there's this. Let's see, will that hit? So these are relatively equal lows, and we could also take a trade targeting them, but that's not my bias. My bias is bullish, so I'm just gonna sit and wait. Now check the 15. You can see this low here has been run. Yes, has run these relatively equal lows, putting in the SMT, but we remember we're not in any kind of POI yet, well, except for this fair value gap here. And when you check internally, we have got this good inversion. 2 minute, nothing, but here we can take longs towards where this and this. So that's because my bias is bullish. I stick with my bias until market proves me otherwise. So that's 5,000 over 72, so we're gonna risk around 70. Now let's see if this pans out, and those will be as many examples as much as they can. Let's see if the targets get hit, and boom, this here will be a break even because these highs here, then they get taken out, we'll already move to break even, so pretty much a break even. Let's see if the full trade gets hit, and here is the target. So if we don't move to break even, we could potentially hit the target, but if we have the idea of protecting our capital, then this is a break even, which is also okay. Like, you gotta learn to adjust to the market settings. So if you take a break even, just move on with your day. Now this is the trade here, and you can see it was a winner. So there are many examples. Like, literally, even if we could go to the next day, which is the last day of the week, these are 5 trading days. It's 1 week. This is the last. Let's go to the last day of the week, and then we go to the daily. You can see now the day is kind of looking bearish, but when we zoom in, well, what do we see? We are in the end dog, right? Prices run this low here, putting in a high time frame sweep. And check the 4 hour. We're probably heading higher. That's what I think. You have a 4 hour gap. I wouldn't like to target this high. Why? Because I could be wrong, but the low hanging fruit means that I could take the low hanging fruit, targeting this here, then market reverses, or just this. So this is the target that I am okay with. Now when you check the 1 hour, actually, we have a good 1 hour fair value gap right here. Now when you check the 15, you get some pre-market lows as well. So we have another low hanging fruit. Now all we gotta do is wait for low to get taken out, then we can look for some trades. And right at the open, market runs the high there, this one here, and is it an SMT with ES? No, it's not. Now when you check the 15, you can see we're pretty close to these lows here. Then run them, and this low here got run. These ones were left intact, relatively close. And then market runs high. So I was waiting for these ones, but you can see after this sweep, market actually started to head higher, which is totally fine by me, except if ES had already run these lows. So then this day I would wait for something more, for which you can see that the 4 hour has already been hit, the target has already been hit, so I wouldn't be waiting for anything more here, except if the 15-minute would offer anything else. Oh, by the way, there was a trade here. Looking at the 5-minute, if now we consider the 5-minute a higher time frame POI, let's do something like this. So if the 5-minute is now a high time frame, because we have gap, so fair value gaps is like the thing I trade the most, but then we don't have a sweep, but we got the sweep like right before the market open. I mean, right before this fair value gap, and we've got a couple of inversions. There's one right here, but there's one in the 2-minute as well. So you can take a small trade here with your stop here, and probably take it like a 1 to 1.2, something like this, or 1.1 to 1.4. Move to break even at this high and see what the market delivers at this day. Now let's take this trade and see. Move to break even at this high, and that will be the end of testing this. Now that just sit and wait, can also get stopped out. Okay, market move really close to stop loss. I'll move to break even, and boom, target profit gets hit right there. So it was a really quick trading day. I mean, it's not that easy to get this in the live markets, but over consistent reps you obviously get it. So this video is kind of being really long, but the key takeaways are: study the model repeatedly, backtest it, for test it, like make it be like you're written, the only thing that your eyes can stop, like your eyes can spot, sorry. So make it on a consistent basis such that your eyes get used to the model, your eyes get used to seeing that exact thing in the markets. So when you check the statistics of this backtesting session, it was like, I think it was like 4 winners, 1 loss, something like that. It's this one, session results. You can see that exact week we had 80% trade win, 7 trade factor. 7 trade factor. I don't know if you understand this. Profit factor of 7 means you're profitable like 7 times, because obviously if you have a profit factor of 1, that means you're profitable. You can make, okay, 1 is break even, 1 and 1 point something above or above 1 is profitable. So 7 is extremely profitable in my opinion. So now you can see how good this thing looks. So it's just a matter of repeating it and making it on a consistent basis. So without delay, I think that's all about it. And as takeaway, I would like to leave some notes about the strat and some psychology based notes. Right, so the strat is really simple: narrative / bias. Yeah, then the high time frame point of interest, the liquidity sweep, SMT, which is obviously optional. Then you get the inversion fair value gap. Now the truth is that this won't work overnight. You have to be patient and love the process as much as you can. Like, do it whether it's raining, whether it's sunny. Every single time you get the chance to do it. Be obsessed. Now detach from the outcome and work by the statistics, and slowly by slowly reduce your mistakes gradually. Like, if you do a mistake twice, that's dumb. You can do a mistake once, but learn from it so you don't do it anymore. So that's all for this strat. And for the strategy breakdown video, I apologize that this was really long. It shouldn't have been, but yeah, it's done. We've managed to make 5.75% 1 week, and with an 80% win rate, with 1.8 risk to reward. So this is extremely good, and you can do this exact thing. So good luck and good trading. Go and make it. Peace.